Do you want more money in your pocket? In order to do so, conservatives in Washington say we must cut wasteful spending to shrink the national debt.
To further combat inflation, we will not only be reducing the cost of energy, but will be ending the flagrant waste of taxpayer dollars.
Most economists and politicians agree this is key to a stronger economy, but is it really that simple? What if the real debate isn't just about government spending, but whether we're bringing in enough revenue to keep up? In this video, we're breaking down the true impact of government spending, who benefits, who pays the price, and whether the solutions we hear will actually make a difference. Stick around because in Chapter 1, we break down how the national debt affects you. Then in Chapter 2, we dive into the conservative playbook on taxes and spending to see how it has shaped the nation's finances and what it has meant for our pocketbooks. In this video, we're diving into the conservative approach to taxes and spending, how it shaped the economy and what it means for your wallet. But don't miss Part 2, where we break down the liberal playbook and how their economic policies on spending and revenue have influenced your finances and financial future. The US national debt has soared past $34 trillion, a number so massive it's hard to comprehend. To put it in perspective, if you stacked $1 bills, it would reach the moon and back, twice. But who's responsible for this massive debt? From Obama to Trump to Biden, every administration has contributed to it, for different reasons. Rather than debating who's to blame, let's focus on what really matters. How does this debt impact your wallet? What does it mean for the economy's future? And are the proposed solutions actually working? The government spends more than it collects, it has to borrow. And more borrowing fuels inflation, driving up prices on essentials like groceries, gas, rent, and even your morning coffee. And who feels it the most? Not the ultra-wealthy or major corporations with financial safety nets. It's middle-class families who are already struggling to keep up with rising costs while paychecks remain stagnant. Let's be real. The government doesn't have unlimited money. Every dollar it spends has to come from somewhere. And that somewhere? Us, the taxpayers. More spending today often leads to higher taxes tomorrow, whether through income tax hikes, payroll deductions, or even hidden fees that slowly eat away at your earnings. While Washington debate budgets and policies, the reality remains. When spending isn't controlled, everyday Americans end up paying the price. So when leaders call for cutting federal spending and reducing debt, they're not necessarily wrong, but who has really worked at reducing the debt in the past? Is slashing government spending the only way to tackle the national debt, or are there other solutions? Conservatives have long argued that government bureaucracy is inefficient and leads to wasteful spending, advocating for shrinking federal agencies and cutting unnecessary costs. But have they always been successful at cutting spending to reduce the deficit? And how do their tax policies impact government revenue and the national debt? Recently, figures like Donald Trump and Elon Musk, along with the Republican Party, have pushed for deeper cuts, claiming they will save the government billions. Their strategy focuses on three key areas. 1. Eliminating government contracts linked to unnecessary expenses, such as education contracts. 2. Reducing foreign aid, prioritizing domestic issues under an America First approach. And finally, downsizing the federal workforce to curb government expansion and spending. Supporters see these measures as a way to reduce waste and boost economic freedom. Critics, however, warn that cutting funding for critical contracts, foreign aid, and federal agencies could weaken essential services, strain national and state budgets, and ultimately lead to higher costs for individuals. Nonetheless, conservatives of today argue that reduction in government spending is necessary. In addition, they argue that lowering corporate and income taxes, along with reducing regulations, can drive economic growth by putting more money in the hands of businesses and individuals. The idea is that with fewer financial burdens, companies can invest, expand, and hire more workers, while individuals have more disposable income to spend, potentially fueling job creation and higher wages. Supporters see these policies as a way to stimulate the economy and encourage innovation, while critics question whether the benefits truly trickle down or primarily favor corporations and the wealthy. So, how have these policies worked in the past? In the 1980s, the Reagan era, President Ronald Reagan famously cut taxes for high-income earners and corporations, and also reduced government spending in some areas while increasing military funding. The economy saw strong growth, but the national debt also skyrocketed by 185%. In the early 2000s, President George W. Bush rolled out some of the biggest tax cuts in U.S. history, slashing rates for individuals, corporations, and investors. The goal? To boost the economy and put more money back in Americans' pockets. But here's the catch. While tax revenue declined, government spending surged by about 53%. The result? The national debt exploded, nearly doubling from $5.7 trillion in 2001 to $10.6 trillion by 2009. During his first presidency, Donald Trump pushed through sweeping tax reforms, most notably the 2017 Tax Cuts and Jobs Act, TCJA. This law lowered the corporate tax rate from 35% to 21%, aiming to spur business investment and economic growth. Supporters credit it with stock market gains and increased corporate spending, while critics argue it disproportionately benefited corporations and the wealthy. At the same time, federal spending rose by approximately 15.6%, even before the COVID-19 pandemic. However, when the pandemic hit, the government unleashed massive stimulus spending to counteract economic shutdowns. The result? The federal deficit soared, with total national debt rising from $19.95 trillion to approximately $27.75 trillion by the end of Trump's term in 2021, a 39% increase. Despite conservative rhetoric about reducing government size, Republican administrations have historically overseen both tax cuts and spending growth, leading to rising deficits and national debt. So what approach do Democrats take, and what are the results? Does their strategy lead to a decrease in the national deficit? Stay tuned for part 2, where we dive deeper into the Democrat approach of spending and taxes and how it has contributed to the national debt. If you want more insights into how economic policies and businesses impact your daily life, hit that subscribe button, because understanding the economy means understanding how it shapes your job, your finances, and your future.